This is Oliver Slope with Blue Line Futures, come to you from the floor of the CME here in Chicago with your livestock roundup. And it was a choppy session, traded both sides of unchanged, as I think a lot of market participants look to square things up ahead of tomorrow's cattle on feed report, which early estimates indicate that it could be potentially friendly. But how much of that is already priced into the market after we've seen a month and a half basically of uninterrupted rallies? That month and a half rally has brought the RSI, or the Relative Strength Index, into overbought territory with the reading of 73. So if we get a neutral to bearish report, I wouldn't be surprised to see that kind of trigger some long liquidation to start next week's trade. Cash market has been starting to pick up a little bit here this afternoon. We've seen two higher in the south. That's coming in at 110. So that is certainly a friendly catalyst. But again, I think a lot of market participants kind of looking forward to tomorrow's USDA report, and that's going to set the tone for next week's trade. From the technical perspective, 113.80 to 114.25 is the pocket that the bulls want to defend. This is previous resistance, now becomes support. Breaking close below here potentially puts us into more of a correction mode as longs look to book profits and maybe steamroll a little bit lower. Now, on the feeder cattle side of things, November feeder cattle have been kind of chopping back and forth over the last week, but we're starting to move our focus into that January contract. That's where the majority of the volume is going to start to be. 142.50 is the recent highs, as well as the July highs. This is the top end of the range. If the bulls can achieve consecutive closes out above here, potentially that takes us back to the low end of that range, the recent range, 136.20 to about 137. Now, wrapping things up with the lean hog market. Lean hogs obviously have been one of the more volatile commodities over the past several months. That continues to be virtually untradeable unless you've got a very thick skin. It has been very choppy, but we've been both basically range bound, call it 65 to 72 over the last month and a half, down towards the low end of that range. If we see it close below 65, potentially that takes us to fill the gap from September 11th, which comes in closer to 61.50. On the longer term, we still like hogs, but are very concerned about a weak close taking us to fill that gap first. If we were to go fill that, I think that's where the value is on the buy side. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.